When we first started this journey, there was a couple issues when we started in the US with US housing data. The first issue was the lag nature of it. And then the fragmentation. And you saw the fragmentation based on the official counts published by the government versus NAR versus Zillow. Just simple things like how many homes are on the market right now. There are huge discrepancies between these sources. So that was clue number one, that nobody knew what they were talking about. And then as we started to get involved in this process, we realized another thing. Most folks were bricked out of semi-good housing data. These deals from these vendors were measured in hundreds of thousands of dollars.
The Polygon Community Grants Program was launched with 1 billion tokens, all for Polygon builders. Season 1 is live right now and features $35 million in Matic to support the next generation of Polygon projects. Builders on Polygon, these grants are for you. Join the aggregated future today by applying at polygon.technology/grants. Avalanche is a smart contract platform that has a novel consensus protocol, subnet infrastructure, and the Hyper SDK toolkit, which allows Web3 developers to easily launch custom, powerful blockchain solutions. You can start building today by checking out the link below. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Danny from the Blockworks research team, as well as Jason and Trevor from Parcl. Thank you for joining us, Jason, Trevor.
Thanks for having us.
Before we get started, do you guys want to share a little bit about what you're building over at Parcl?
Yeah, totally. So Parcl is an ecosystem that's composed of a decentralized trading application called the Parcl protocol, where users can get leverage long and short real estate price movements. Today, focused on U.S. cities and neighborhoods. We'll be expanding internationally, hopefully in July, if not early August. Underpinning the exchange is a blockchain protocol built on Solana. In addition, and really the key moat is the data is provided by Polygon Labs, which is Parcel's data effort. And it provides real-time real estate indexes that are the reference price for the speculation that occurs on the Parcl platform.
I want to get more into the data side a bit later, but I think my first question to you guys is going to be what inspired Parcl? As far as I understand, neither of your backgrounds are in real estate, so I like looking over your blog and over your work. I mean, Parcel's great, but I want to understand why.
Yeah, totally. Yeah, and there's a third co-founder, Kellen, who's not here, but the initial how and why we started. So Kellen and I used to work together at a hedge fund, trading and investing in technology stocks, long and short, and I focused mainly on internet software and payments. And during COVID, there was a huge spike in real estate volatility. We were looking for ways in which to get to basically place a bet on real estate price movements. The obvious one at the time was to long Miami and short New York, and really we didn't want to have to go buy a house, and there's a lot of legacy ways in which to gain real estate exposure. And so we started looking into it, and we were pretty surprised there's no betting market or derivatives market for real estate. And then, that was the root problem. And then how did we go about solving it? That's when I looped Jason in. Jason and I went to high school together. He was at Microsoft focusing on data, big data. So the first problem of Parcl was that there were no real-time real estate price feeds. The Case-Shiller is, and I know you'll touch on this, but just for reference, the Case-Shiller is the main USA price feed, updates once a month on a 2-month lag. This day and age, that's not good enough to create a product on. So that was the first thing that we had to understand if we could do that, and we did. And then how do we, as a team, make an exchange in which to enable users to place money behind their viewpoints? So that's, at the same time, DeFi Summer was, just occurred. We're pretty familiar with blockchain. And we eventually evolved into a perpetual futures architecture, which is a good architecture for something like this. It's kind of resembles a derivative, but there's no deliverable because it's an index. And so, yeah, that's basically was the vision. There's been a lot of iteration over the course of the 3.5 years we've built Parcel, but by and large, the vision has been unchanged.
That's cool. I want to start off mainly with the PerpStacks protocol, the real estate perps protocol. So we've had some attempts at real estate on chain. I think the big one, apart from Parcel, is Realty, which hasn't done particularly well. And it's like kind of similar to other assets that people have tried to bring on chain, like non-financialized assets, not like TradFi securities, equities,
Yep.
or bonds, etc. How do you see real estate being adopted on chain? What is like the curve over there? How long do you think it'll take?
That's a good question. I think it's important to separate the various use cases. So I think a few of the earlier attempts, and both in blockchain and traditional ways, have been to fractionalize real estate. That's like been the fractionalized, and in the blockchain world, it's tokenized, but you're basically tokenizing a fraction of it. So same concept: buy a house, put it on chain; buy a house, put it in a LLC, split it up. We weren't as Parcel. We weren't really interested in that. Just intuitively, I think the main reason that it's been difficult to do that. There's kind of there's two structure. There's like the structural of the actual product, which is in order to get a breadth of product, you need to buy a house or a property, which requires capital, and then you need time to close that deal. So it's naturally has headwinds to scale, right? You have limited capital and you have limited time. How many deals can be done in 1 year, 2 years, 5 years, like a couple thousand in 5 years or something like that? So you're limited by those issues, and then for more free flowing capital, it is intriguing over the longer term. That brings me to the second point, which is there's just a lot of legacy infrastructure that would need to be bypassed to create a fluid market on chain, deeds, insurance. The list goes on. Mortgages, risk, underwriting mortgages. So there's a lot of legacy things that may have been put in place to protect people. It's done an okay job, but those things need to happen before you can actually have tokenized homes at scale on chain or elsewhere.
Yeah, Trevor, I think you made great points about differentiating what you guys are building at Parcel versus other attempts to really just bring assets on chain. I think that's a great point to make. I think going back to kind of the discussion around usage of the platform and maybe where it's going, there is maybe a little bit of a fundamental question on like what does true adoption look like? You mentioned the case Shiller's, price feeds. And I think there's a question there that, futures contracts for those have existed for maybe 15 years, but they haven't really seen any adoption. Is there a good reason to believe that, institutions, funds, traders would be interested in Parcel price feeds over those? Like, has that industry not expanded beyond like the 20 cities they offer today for a good reason? Or, there just wasn't enough interest, or, the existing firms just didn't feel like building that out further? Curious, any thoughts in this area you have?
Yeah, that's also a great question. It's largely TBD, because Parcel is geofenced in the U.S. because there's no regulation we can follow, and we will open access to the U.S. when something is available for us to follow from a regulatory standpoint. So that's one. So there's no like true glimpse into what, and by the way, we offer only U.S. cities today. Over time, technically, or like theoretically, this is probably like the most mismatched it'll ever be, right? We'll offer international cities next, which get closer to the user, and then hopefully we can get some regulation in which we can follow. And so in both instances, we're getting closer to a potential user, right? Either people who are more interested in their regions, or people or overseas, or US people. With respect to the Case-Shiller futures, it is uncertain as to why. I think so much happens in 2 months, right? We are used to, in crypto, we're used to 24/7 trading. In markets, you have spies, and you have futures, like mini futures that trade basically 24/7. They open on Sunday night, right? And then you need to manage risk. So the instrument itself just isn't great. And to that extent, I think it limits adoption, just given there's other ways to express a macro bet if you're 2 months behind. So that's one. We're pretty encouraged with the volumes to date, particularly versus the Case-Shiller futures. We do a lot more volume than that. And novel product, over close to 2.5 billion in volume this year. And then, like I said, I think hopefully there's like a clearer path both to international and the US within the next year.
That makes sense. One thing you touched upon there is regulation, and I'm cognizant that we shouldn't get too into it, but I kind of want to understand how you view that changing and how that would be helpful to you. Obviously, it would help with inflows because you can allow Americans to trade on it, but how do you view that over the next, let's say, 2 years, 3 years, maybe?
Yeah. So I have no specific insight, but I will say we've been following regulation for quite some time. And it was very, very adversarial last year and the year before. There's definitely a shift. That's my only alpha. It's not even alpha, but it's like very obvious that there's a shift in Washington to somehow create guardrails in crypto, create some sort of framework. The potential VP is pretty forward on this. I think the Republican candidate also is at least open to exploring ways to get this into the U.S. At least that's what's been communicated. So, and then you also behind that kind of have other people, because they don't want to lose political power, following suit. And it's becoming more of a bipartisan issue, which is very good, at least from a progress standpoint. So momentum is there. How it actually, DC is sluggish in terms. There's no like true speed, but the momentum is positive. And then basically, it's like how does it look on the other side? But we've been doing this for like 4 years. This is the most aggressive they've been, which is promising.
Yeah, the crypto focused outlook has definitely shifted recently, which is promising for the industry for sure. I think touching back on customers, like future customers, if you're expanding the markets, going internationally, looking to broader user, who do you guys really see as the like key customers for the trading product itself? I think there's a great example in terms of really being able to like hedge an existing real estate portfolio, for example. But is that the only sort of example, or are there other bigger or big potential customers that you're thinking of here?
Yeah, it derives off of this, basically off the top umbrella that I'll mention here. It's like real estate's the biggest market in the world. and there's no liquid derivatives market, unlike every other commodity market or stock market or bond market. Like, there's no liquid way to get exposure. So part of our just general thesis is like, the question is, should that exist? And then from there, who uses it? The use cases are really vast, right? It's like, and I can't, or we can't predict exactly who will find utility in using Parcel to express a bet. The retail user is priced out of homes, so they get exposure through Parcel. Their renters, they hedge their future rents with Parcel. There's regular way speculators who just want to play trends, like a hedge fund. It's on the institutional side. It's hedging is a large potential market, given there's no way to short real estate. Everyone is just long real estate. There's various ways to try to, whether like through interest rate swaps or REITs, but REITs are really kind of asset classes in themselves versus specific cities and neighborhoods. So shorting is where I would imagine the vast institutional demand is sourced from. And then we've recently rolled out rental markets. It kind of opens up an avenue for those funds, because a lot of institutional investors are focused on cash flow management, so that they can ensure that basically their capital is acting accordingly to plan, and then if it's not, they have some protection. So rental markets, we think, speak more to institutions. Of course, really, institutions aren't dabbling in blockchain just yet, and that's why regulation is very important. It's hard to see and go speak to the biggest real estate investors in the world and be like, but we're geofence in the US, by the way. It's like, oh, but so it's just like, you need to be there when that opens. And then I think of all the real estate applications, this is something that at least speaks to them, what they do, and how to provide a utility to them that isn't available even in the real world.
Yeah, that's a great point. I guess thinking beyond just the customer base on the product side of things, I mean, you guys are looking at multiple things coming here in the future, foreign markets, Forex trading to go alongside that potentially as well. Are there other plans to expand, maybe even beyond real estate? I mean, we've seen the rental markets as well. That's a good call out from you. Do you guys have other things in the pipeline, either real estate or non-real estate related, to kind of further expand that product offering?
In the immediate term, it's going to be focused. So real estate is such a large market opportunity, and we've that's why we're here, is to attack that. And there's a lot of regions, a lot of types of products. So the derivative products can be, so there's the cities in the U.S. currently available, the accompanying rental markets. There's international markets on the come. In the future, there's probably some ways to create like some specific indexes, like coastal cities or coastal, more for insurance purposes, or something like that. In the immediate term, from a foreign exchange perspective, we're really going to be, so the Parcel exchange is based on USDC, and there's really not a liquid FX market, and adding FX will create some sort of complexities that we initially thought they wouldn't be too complex, but there's some edge cases where it can be exploited. So what we're going to be focusing on from a foreign or international markets are those regions that are pegged to the dollar. So like Dubai, it basically has a flat rate. It's a multiple of one, but it's flat. Hong Kong is largely pegged. And so we'll try to find those. Our data team is amazing and can spin up markets now with pretty good efficiency. So we'll continue to attack that. We will soon. We're planning to offer token perps, such like Solana, like the majors, Solana, Bitcoin, ETH, so that people can cross margin their real estate bets with more volatile assets. And then that also kind of gets us closer to another set of customers, which is like truly crypto natives that may not want to part ways, or, you know, and it gets them, it's a top of funnel for Parcl, and an interest driver. So that's the, call it 3Q, early 4Q roadmap. From there, you know, the space moves fast, but yeah, that's kind of what, that's basically what we can see right now.
Yeah, no, great points. And I mean, there's thousands of cities to go after, so you've got plenty of room to kind of expand into for sure.
Hey guys, Permissionless, the event for crypto natives, is heading west to Salt Lake City, and we're bringing the biggest names in crypto together for an incredible can't miss event. Join me and the rest of Blockworks on October 9th to hear from more than 200 industry titans, including Nick White from Celestia, Shriram from AggLayer, and Keone from Monad. The conversations at Permissionless will be covering the hottest themes in crypto, including modularity, restaking, the Bitcoin and Solana ecosystems, AI and crypto, rollups, L2s, institutional adoption, and of course the November election that will be right around the corner. We couldn't be more excited about this event, and it's happening in one of the most beautiful places in the US. Ticket prices will be increasing towards the end of June, so get your ticket today. Make sure to use the code so I get some credit and bragging rights from the rest of the team. Use 0x10 for 10% off on your ticket. One more thing. We're also hosting the Permissionless Free Hackathon in collaboration with BiddleBox. The theme this year is a multi-chain future, to build a better cross-chain experience so I don't have to have a heart attack every time I bridge to a new chain. All hackathon participants will receive a free ticket to attend Permissionless. So if you're a developer, come join us in Salt Lake City, team up with fellow devs, and build the multi-chain future. Polygon Labs is developing the next generation of open source ZK tech to aggregate crypto liquidity and user bases, empowering developers to grow in a unified web of interoperable chains with the AggLayer. The AggLayer is a machine for network effects. Don't worry about bootstrapping liquidity, just build anywhere in the AggLayer to tap the liquidity and users everywhere. To support the aggregated future and bootstrap quality projects, the Polygon Community Grants Program was launched with 1 billion tokens, all for Polygon builders. Season 1 of the Community Grants Program is live right now and features 35 million in Matic to support the next generation of Polygon projects. For builders on Polygon or projects interested in migrating, these grants are for you. Join the aggregated future and feel empowered to grow in an infinite web of unified, interoperable chains. Apply today at polygon.technology/grants. The age of interoperability is here. With the launch of Teleporter, Avalanche becomes a seamlessly linked network of many sovereign blockchains that communicate so smoothly they feel like a single chain. Teleporter is an EVM-compatible cross-chain communication protocol built on top of Avalanche Corp messaging. It allows any EVM chain on Avalanche to send messages, assets, and data to one another in a simple, fast, affordable, and secure way. Teleporter and Avalanche Corp messaging provide a new foundation for how Avalanche blockchains can communicate and how developers can easily build cross-chain applications out of the box. Build anything you want, any way you want, on the eco-friendly blockchain designed for Web3 devs. Check it out by clicking the link below. One thing I feel like it's overlooked, but we've mentioned it throughout, is the data side. Can you share a bit about what that exactly is, and then maybe we can kind of dive more into it?
Sure. I'm happy to take this one on. To a couple of Trevor's points, we're geofenced outside of the U.S. We're replacing a lagged legacy index, and as a big part of that effort, we have to establish trust, trust in the index, trust in the data, trust in our insights. And so, taking what was wrong with housing data from the top. When we first started this journey, there was a couple issues when we started in the U.S. with U.S. housing data. The first issue was the lag nature of it, and then the fragmentation. And you saw the fragmentation based on the official counts published by the government versus NAR versus Zillow. Just simple things like how many homes are on the market right now. There are huge discrepancies between these sources. So that was clue number one, that nobody knew what they were talking about. And then as we started to get involved in this process, we realized another thing. Most folks were bricked out of semi-good housing data. These deals from these vendors were measured in hundreds of thousands of dollars. And we spoke with many of these teams to understand what the current state was. And so it was at that point we realized that we had to rebuild this from the ground up. Nobody has all the information. It's scattered all across these various sources. And we had to do so in an efficient way to make it accessible to Parcel ecosystem users. And so fast forward to today, we accumulate information from about 5,000 sources. And with the recent legal rulings that are coming out, particularly around NAR, I imagine that fragmentation will only increase, and there'll be less centralization of where the housing information actually lives, which is great for us because we spent time on the technology to ingest from 5,000 sources and create clean signals in the housing market today. So going back to Trevor's point, we're geofenced outside the U.S. and we had to build trust. So we kept producing content that nobody else could produce because we had information that nobody else had. While we were simultaneously working with U.S. partners who trade homes, thousands of homes. And this included the government, this included large hedge funds, and this included investors who are using our housing data as signals to trade against the stock market, futures, inputs to the housing market, lumber, et cetera. And so we can establish those relationships early with data. And then as regulation becomes more clear with respect to what's possible in the US regarding the exchange, we've been cultivating these relationships with folks for a while now on who would likely be first institutional participants in the exchange. And we've already been seeding these discussions with many of these teams who they need this. Look at Open Door in the fall of 22. They were overexposed in Phoenix, and they doubled down right as mortgage rates shot up unexpectedly, and they got hammered. And they got hammered because they had no explicit way of controlling their risk for all the inventory that they held in those specific markets. And that's exactly what the Parcel Exchange offers, is the ability to do that, whether it be the rental operators, whether it be the flippers. And this can span mom and pop operators who are going to feel it the most, all the way up to the largest hedge funds in the world.
Perfect. Wow. You answered like 4 of my upcoming questions. So I'm going to go immediately, I guess, on the more deeper side. I kind of want to understand what's the data versus trading side. Obviously, they're complementary to each other, but how do you guys view the opportunity, like on each side? How do you see, like, because obviously the data side's, I think, a little bit easier to scale, but curious to hear what you guys think of that.
I'll add one thing on the data side as it pertains to traders. Sophisticated traders need high quality information. And we are breaking down the barriers to access that high quality information, both in our price point and over time, the integration of the Parcel token with access to the data. The Parcel token is the greatest way for us to efficiently deliver the highest quality housing information in the world to traders. So as the exchange grows, more sophisticated traders will get involved, and they are going to have a need, and this is already happening. We have many users who are staking Parcel tokens to get access to the API today. Now, granted, it's a little bit of there's some manual efforts involved with navigating these different technology ecosystems, but we are actively working on making that a seamless experience. So from my take, it doesn't matter if you're a hedge fund trading homes in the housing market or you are a trader on our platform. At the end of the day, high quality inputs to your decision-making process are pertinent. You have to have it. And so it's great on both sides because, Web 2 traders, if you will, who are trading physical properties, they get more comfort and familiarity with what we're doing as a Parcel ecosystem. They are the first people that need an explicit mechanism to short or control their risk on the Parcel exchange. On the other end, as more Parcel exchange users come into the system and they grow in their level of sophistication, or maybe they already are a sophisticated trader, they are going to have an immediate need for higher quality inputs to make better decision making. So these things go hand in hand. And it's a a medium long-term roadmap that we have outlined based on regulatory complexity and things along those lines. But from the data side, we're focused on creating the highest quality data that is transparent, accessible, and building a community around developers to reduce the barriers to entry to getting cooking.
Appreciate the overview there, Jason. I think it also definitely sounds like the focus on the data as well is really like what enables the kind of the trading experience going forward. So it's a great point to make. The other question I'd have related to the data is I've seen some of the things around anomaly detection, some different deep dives and research reports. Is that something that you guys as well are looking to expand further, like as more of a like data and research services kind of platform offering for the traders and people that are interested in these types of things, like as they are trading to kind of build their theses and ideas?
Yeah, that's a great question. So with respect to our original content, we let the data drive the story. And so we typically will start very top of funnel. We will look for signals across the country with respect to where things are out of skew. And then we will let that lead to the next level to understand where are different things happening within the housing market, knowing that we're the only ones capable of doing this type of analysis. And then we produce that as our own content to create value for the entire ecosystem. With respect to data and content generation for more, for very specific types of analysis, create an open source community. We're very focused on open source research, on an easy to use SDK. We're starting with Python developers, as that's where typically a lot of this type of analytics and data science will begin, but over time we'll expand that out. And we release all of our notebooks that we use to create our own content to inspire the next person. So it's a long-winded way of saying our goal is to help others do the analysis themselves, create content, understand the housing market differently, and we do that by putting our best foot forward with our own open source work.
Yeah, just to add on to that point, Danny, basically provide the best data and a very seamless way to access it. And the idea there is anyone can go and create content because they can use the API, and then it's not incumbent upon us to do everything. And that's the ecosystem. Same thing, basically enable data, enable a platform to express views on the data, and then how people use it. That's our mission. That's our intention and North Star. And then how people choose to use it is somewhat out of our control. But we can see green shoots of certain things. And then a lot of it has to be bootstrapped. The team does a great job with content, showing what the art of the possible. And then, once we get into critical mass, the API has been out, only for a few months, has been for data, has seen some good traction and use cases. And, that's exciting. And then a lot of the Parcel trading platform people are using the data to get trading insights. In the future, it's possible, us or someone else creates like a Bloomberg style dashboard to I think that's kind of what you're talking about, Danny. That's possible. The question is, does Parcel need to make that, or does a user want to make that, or kind of like a Dune situation? So, yeah, I think that's kind of where we're headed.
Yeah. So build the great tools, make the data product a fantastic offering and lead people to it rather than, build out, a research suite or more of a data platform in terms of delivering,
Exactly. Because both are so vast. Like, as I mentioned on the use cases for the trading platform, like there's a lot of potential use cases. The same with data. It's just data. So the use cases can be of governments, schools, big operators, small realtors, traders on Parcel, and then if we plant our stake in the ground and say this is what we're going to build, then you could be completely off in one direction. Whereas you're enabling people to do that. And then if it's super, super, super compelling, then, we can consider it. But at this point, it's kind of creating an ecosystem that people can build on top of.
Yeah, great answer. And I think that sort of spirit really, aligns with kind of the decentralized kind of, ethos and fundamentals of what people in these types of communities tend to be after. So it makes sense.
I want to understand how the token ties into the two products, and if you guys are planning on tying that in a bit, I guess making it more integral in the future.
Yeah. So the Parcl token, for context, it was 3 months to the day. The initial distribution from Parcl Limited, and was gotten into the hands of the core community. The three pillars are for initial utility are governance, and so governing the certain aspects of the Parcl protocol, including which markets will be rolled out in the future. Access to Polygon Labs data. So if you stake X, you can have API access. Obviously, want that to be a compelling use case. So, that's something that is the team is driving home. And the third is the ongoing incentives. So if you own the token, stake the token, and participate in incentives programs like points, you get a boost. So generally speaking, I think those are relatively good utilities. Over time, I think there's ways to continue to create value, particularly on access to the API, hardening that, and enabling people to use Parcl, the protocol. There's ways to create value in open sourcing items on the blockchain side, as well as the API. There's been several other projects buying the token, acquiring the token, staking it to either enhance or enable parts of their own products. We love to see that, and what we want to do is drive more of that activity. So that's what we'll be focusing on in the next, for the foreseeable future, to continue to add value to the Parcl token.
I'm glad you mentioned the points program. I'm curious, just in terms of the interest and usage of the platform over the past 6 months or so. I think if you look back to the token announcement sometime in February, there was a massive increase in TVL to the platform and activity. And then when you look at the token launch itself in April, there was a massive decrease following that. I think, this is something we see with a lot of protocols. People get excited about a token, and they go and they use it, and they want to, earn some cash for their activities, or, basically liquidity farm the thing. Do you guys have any thoughts about kind of how that went? Would you do it differently, design the points program in a different way, or some different mechanisms that you've thought of kind of after the fact, or, was it as good as you could have hoped for?
Yeah, that's a good question. So, I think in terms of happy when we went with the points program, I think we were on the earlier side, and now it's basically, it wasn't like the earliest, but on the earlier side, which is good because it's not like hyper dilutive, and now it's really table stakes to have points. So happy about that. There were a few bad behavior. Designing points is a very there was two things that we wanted, right, at first, and we weren't thinking like so far. It was like, yes, it was a good design, but we're like, all right, let's see like what happens. That was the idea when we put it out in December. It went super viral, basically, given we had made some go-to-market changes and had people like organically accelerating momentum. And then there were some bad behaviors. We saw a lot of self-referrals. Open interest was something that we were rewarding, and it became toxic because people would just open two positions in the same market, long and short. So that's called delta neutral. The team did a really good job of addressing those things and going back and setting the precedent that that's not allowed anymore, but giving points for them. So in the past, and then most recently we moved away from open interest into trading fee generation, basically like trading volume in short. I think that is healthier. And then in terms of activity, huge amount of activity. We're kind of right now we're like announcing token drop levels roughly. But at the same time, this is like hundreds of X's greater than last year. So it's like, in terms of where we are, that's kind of the point, is to get eyes on the protocol, have an active community that can help you grow and improve and give feedback, and we can hear it. So it's like pretty much all we could ask for in that regard, and well ahead of expectations. Most recently, for the second distribution, we included like time-based staking, which I think was good, just given some of the behavior around airdrops generally. Like it became like a mimetic reaction basically from us on. So trying to figure out ways to, because now it's not just Parcel Limited and the Parcel team and investors, it's everyone now who owns Parcel is a stakeholder. So it's incumbent upon us to try to create good tokenomics to enable them to continue to prosper and create minimal damage. So it's a lot of thinking about the game theory for points and then drops, and figuring out how to do it in a way that is beneficial for the ecosystem at large.
I'm happy you gave an honest answer, Trevor, and you didn't just say, "Oh, I think we did very well." That was it, and you like actually.
No. Every other week, there's like, oh shit, like this, they're exploiting this and this and this. It's like, you don't think about. There's so many edge cases, and it's so. It's become very, very industrialized. So it's like, if it may go unnoticed for a little bit, and then one day this misdesign or something gets exploited, and then it's in a Telegram chat, it's on Twitter, it's getting retweeted, and now everyone is doing it, and then it's overly exploited, and then you have to do something, right? So it's just, you got to think. Someone said nicely to us, who's a participant, it's like, you are the game designer, so you're designing the game. How do you design it? And you need to think through these things, and if there's something that's not working, you have to fix it as well.
That makes sense. One thing you mentioned was that you have 100x the volumes that you did compared to last year. And that's something I want to ask about. You guys have been building on Solana for quite some time now. And first of all, I want to ask about like how it's changed since you guys initially started building. And if you had any doubts in, I guess, like throughout late 2022, early 2023, because I'm like, I can't imagine what it must have been like, especially like early 2023. But how's that been?
Solana specifically,
and how the environment has changed, I guess, because now it's the darling of CT.
Yeah. It's been a ride, I will say. So the choice to go on Solana was made around this time in 2021. So maybe Solana was like $7 or something. It was not like it wasn't hot, but it fundamentally, it had the things that I think you would want. It's one layer, it's scalable, it's cheap. And that's good and bad, right? Because on Solana, what happens is, because it's so cheap, you get a lot of activity on NFTs and meme coins. Like that wouldn't happen as pervasively on ETH because it's not a penny to trade. So you wouldn't flip, and you have to. And same thing with the airdrops. Like you need to think about if you want to sell your airdrop for more than you got. So but on Solana, it's like I'll flip it. It's half of a cent, so whatever. So that is one of the emerging. So during the times of the FTX, we were on our way back from Lisbon on the Blurry Point, and that happened. It was bad. And then it was just kind of like very dire. It's like D-Gods left, and whatever. They are who they are. I had a lot of respect for them, but like they were a big player at the time, and they were like the number one NFT project. So, and then, it's just, we had to consider all options for survival. There was a guy in Australia who in July came to us, was like, I love the product. Here's what's wrong with it. Like, I want to put in X amount, like a lot of dollars. And we're kind of like, okay, if we want to port to another chain, we're just going to create the same flawed product on another chain. We won't make any progress on our actual product. And the biggest issues, aside from our issues, were like, I can't get money out of the bank. Like, I can't even get it to Coinbase. It's not like, oh, is it EVM? Is it Solana? This is a normal TradFi hedge fund guy. Like, the issues are much larger than EVM versus Sol. So what we did was just double down on the issues, tried to fix it. Team did a great job, executed, and then I don't know why, but Solana kind of came back. We had a good product at that time, and then Gito had a great airdrop, drove interest in points and yada yada, and it was driving liquidity back to Solana and then trust back to Solana, because it's kind of like we've forgotten about it, but during like bad times, it was like Solana always goes down, and I can't trust it, and there was all these things, because when the price is bad, you look for every reason why it's bad. And then back to the point I just mentioned, now it's like a fight for attention, but it doesn't. You just have to keep building, and like whatever happens. But those things come and go. NFTs were one large flux. And meme coins now, millions of meme coins a month just get created. But the teams keep building. Solana has really strong teams, and it's not overly abundant with teams, because it's a hard programming language. And if you were building here, these people have stuck around. So that's my answer on Solana.
Yeah, that was a great look back over the years. I guess looking forward, or even just recently, I think we've talked about and touched on a few of these things, but there's been a lot of interesting releases and announcements from you guys. The rental price feed, talking about Forex and trading, different international markets as well. Is there any other teasers that you guys have, or when it comes to some of these releases, is there anything you guys are most excited about that you really want to emphasize?
Yeah, I'll speak from the protocol side, and Jason will have some stuff on Parcel outside. But yeah, I kind of spoiled it earlier in terms of all this stuff. I mean, when you think about it, like, these are pretty interesting things. Like, rental fees are the first of its kind, more or less. Dubai will be the first tradable like market in Dubai. Then we'll have Hong Kong. We'll continue to roll those out, so I don't want those to get diluted. I'm going to start exploring different types of collateral. In order to, that's probably the biggest arc right now. Adding new feeds is just regular business. Like, that's not that we can do that quickly. And again, the team, to add a new market now, we've become very, very efficient. So in terms of rollouts, like international tokens, very excited about both of those. More structural or like architectural, trying to find ways to integrate more collateral such that we can just offer users more of what they want. So it's just like step by step. And those are the main things for Parcel protocol over the next, call it 3 to 6 months.
And Jason, if you want to jump in with anything exciting on the data side as well, if you want to highlight.
Yeah. So the next couple weeks will be focused about enriching our unit level information. The ads there will be owner indexing, so you can see the mom and pop portfolios, the institutional portfolios, whether they're on the rental market, the listing market, the sales market. Rental and listing markets will be the most forward-looking indicator with respect to what these portfolios are doing and what the markets will be doing. From there, we will be naming the top 25 institutional portfolios so folks can simplify understanding what's happening within housing. And then thematically across the whole way, huge effort with respect to community building. So we'll be doing Discord sessions. We'll be doing maybe X isn't a really good platform for doing like screen share type data science work, but we'll be a lot more deliberate with respect to hosting, office hours and helping empower other builders to go build different applications. And we've already seen a wide swath of applications being built directly off the API that were unexpected. And so I'm looking forward to community continuing to bring people in, and because people have all sorts of cool ideas. So the goal is really let them get to it as efficiently and as fast as possible to test whether or not it's there's something there.
Perfect. I really excited to see what you guys cook up over the next, say, few years. I want to thank you both for joining, hopping on and talking about Parcl and what you guys are going to be cooking up. Danny, do you have anything else you want to say?
Yeah, just same from here. Really appreciate you guys coming on and give us a little more background and some insight into what you're doing.
Awesome. Thank you all. Appreciate it.
Thank you both.
Are you currently building on Polygon or interested in migrating? Season 1 of the Polygon Community Grants Program is live right now and features $35 million in Matic to support the next generation of Polygon projects. Builders on Polygon, these grants are for you. Join the aggregated future today by applying at polygon.technology/grants.